Everyone, welcome to another video. So in this video, we'll try and understand what FIRC is, or Foreign Inward Remittance Certificate, and its relevance basically in GST. So FIRC is nothing but a certificate that can be issued by all the banks, and it is something that acts as a proof for all your international payments. So if you are an exporter, if you are in the field of exporting out goods or services, the proof that you can get from the bank for the inward remittances in foreign currency is basically your FIRC. Either you can request the bank to issue an FIRC to you when you have inward remittances in foreign currency, or you can go to the bank's portal and download the FIRC by yourself. Now, this is a sample FIRC that I have in front of you, the screenshot of which will enable you to understand what all details generally come in a foreign inward remittance certificate. So you have the reference number, which is called the FIRC number, the FIRC date, the basic detail. But the most important detail here is, of course, the remitter's detail, your customer's detail, the person to whom you're exporting out goods or services. So his name, his address, his bank name and bank address. What is the foreign currency that he's sending, which will be as per your export invoice, whether it is goods or services. What is the equivalent INR? It is based on the rate being applied, whether it is rupees by dollar or whatever, the rate being applied by your bank at the date, on the date in which the foreign remittance is received, and then it is converted into equivalent INR. So this certificate gives you all the details required to understand how much of money has come in, how much of money will finally get credited to your bank account in terms of INR. And this is generally for export of goods and services. Now, as far as GST is concerned, in the area of refunds, you have the importance of FIRC coming in. There is a term called export of services defined under GST law, and this is under section 2 subsection 6. If you are in the field of export of services, and if you satisfy the definition, you need to satisfy the definition of export of services, which has around 3-4 conditions. One, the supply should be in India. That is, of course, you are exporting, so you are in India. The recipient should be outside India. So you're basically your customers outside India. The place of supply should be outside India. Naturally, when you're exporting out services or when you're exporting out goods, it is a place where the services are delivered or the goods are delivered, which is basically the place of the customer outside India. Both should not be related. And the last condition is very important, that the payment or the receipt for this particular export of goods or services should be in foreign currency. And what the GST department mandates is that if you need to prove that the payment has been received in foreign currency, you need to furnish a foreign inward remittance certificate issued by your bank. Another definition under GST is zero-rated exports. Zero-rated exports are basically export of goods, supply of goods or services to a place outside India or to a special economic zone. So when you're exporting out goods or services to a place outside India, basically outside India, then on your purchases, you would have definitely paid GST. So that is GST input tax credit. But you have nothing to be set off because on your export of goods or services, there's no GST. If you file something called a letter of undertaking or LUT, then you don't have to pay GST on whatever goods or service that you're exporting. So naturally, when you don't have GST on your outward supplies or your sales, the GST that you paid in your inward supplies or the input tax credit cannot be utilized against your output tax. In other words, you have accumulated input tax credit and you want to claim a refund of the same. In order to get a refund of the ITC or input tax credit, whatever is accumulated as purchase GST, you need to furnish, one of the documents that you need to furnish is an FIRC, which is the proof that whatever goods or services you have exported, the payment for that has been received in foreign currency. And the department is happy with that, plus other documents, they'll give you a refund of your purchase GST or your input tax credit. In addition to GST, you have certain provisions under the Customs Act which mandates the submission of an FIRC. Even under FEMA, Foreign Exchange Management Act, where you need to prove to the RBI and under the FEMA Act that you have received the payment within so and so days, you need to furnish an FIRC. Even for companies receiving investments from foreign investors from outside India, the company will have to file certain mandatory forms with the RBI, and one of the documents that goes in each such form is basically the FIRC or the Foreign Inward Remittance Certificate. Another point to be discussed is the difference between FIRA and FIRC. So FIRC, as you know now, is Foreign Inward Remittance Certificate. FIRA is Foreign Inward Remittance Advice. Now, with all the RBI rules and regulations and all that, majority of banks tend to issue or tend to give you an FIRA instead of an FIRC. An FIRA is something that is relevant or is in line with the SWIFT message received by the bank. And these days, they don't give you a certificate as such, they give you an advice, and that is called FIRA. Now, the issue here is that the GST department still is holding on to the submission of an FIRC, though a lot of banks these days do FIRA and not FIRC. But that's the problem right now, where the GST department only acknowledges the submission of FIRC and not FIRA. But again, if you don't have any FIRC, but the bank is only giving you an FIRC, you can very well apply for refund. Just try to get a letter from your bank stating that, look, FIRC is no longer being issued. I have given the registered person an FIRA and he's claiming a refund for the same. Here is a letter from my side. That should be sufficient enough to claim a refund and for the department to approve a refund of the accumulated input tax credit. Well, I hope I was able to make things clear in this particular video. If you liked the video, you could show support to us by hitting the like button. If you want more videos like these on a regular basis through way of notifications, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.